certainly Greece taking the axe once again to its spending plan.
Yeah, we'll see if it's enough, Ashley. We're going to talk about it with Jim Frischling right now, the founder and president of NewOak Capital, who's here with us in our New York studio. Does this give the French and the Germans the cover, or is this enough for them to go ahead with some sort of a package that backs up the bonds for Greece? I guess that's the question.
I mean, my immediate reaction is that it seems the austerity measures is a little bit more than the market was expecting, which is probably a step in the right direction. If the goal is to reach a good agreement in Friday, when the meeting takes place in Germany, I think people expected to see something that was painful. I think the comments about the stifling the Greek economy is unfortunately true, but real measures had to be taken and real pain had to be, I guess, displayed in order to try to convince the other EU nations to get involved here.
Now, Jim, your firm plays in the debt market. Do you see any opportunity here with some of Greece's bond offerings, things like that?
I think actually the bond offering, which has been talked about, and actually I guess had been scheduled a little ways ago or a week ago, I expect it to come quickly. I think the market is going to react positive to the size of the austerity measures. I think there's going to be the expectation that the EU.
So you don't think people are averse to the risk of Greek debt at this time?
I think people absolutely are averse, but the combination of the slightly larger than expected austerity plans or measures, I think the expectation that Friday they will see the EU come in, then you're going to hear a bond announcement, the 10-year bond deal.
So with that setup.
Now the question is where do those bonds trade relative to other relative sovereigns? I think Greece expects their debt to trade in line. I think that certainly will be a discount, but I think if these things come together, the austerity measures and the EU package, you could expect a less of a discount than obviously it would be otherwise.
Yeah, one more word on that without just getting way too deep into the weeds of a market that a lot of people don't understand, sovereign debt, but the debt of nations as they're trying to sell it to finance their own government's dealings. Has there been too much of a sell-off in Europe where you're seeing opportunity across the board here? Do you think that those sovereigns will fall more in value? I mean, how do you look at that market in a general sense right now?
I certainly think. Again, I guess I'll use the cliche of a flight to quality.
Right.
I think this is a great time for the most established to be tapping the market. Issuing debt now is expensive, but I would say that I don't say second tier, that would be negative, but I would say I don't think people are reaching for spread right now. There's enough, let's say, yield in the safer place. Right now, such as Germany will continue to trade.
Right, so the big countries that are going to make it through this, but you stay away from the quote-unquote pigs for the moment: Portugal, Italy, Ireland, Greece, and Spain.
Unfortunately, I think that is unfortunately for them, that is the recommendation.
All right, Jim, thank you very much. It's complicated stuff, but the Greeks moving towards, well, hopefully putting this behind them. Thank you, Jim Frischling. We'll be back to you now. And for an instant audit on it, Jim Frischling's with us, founder and president of NewOak Capital. Give us a state of the consumer here. The spending pulse numbers that Jenna referenced, not bad. And Costco a little below expectations, but the earnings are still going up. And
Walmart had fallen a little short also.
Yeah, they did
as a result of dropping wholesale prices. So now you have BJ's coming out, and I guess the concern is they might. I think people are looking at them as the third largest wholesale club to maybe be a barometer of shoppers' willingness to spend. With Costco maybe coming up light, that's maybe not a great sign for what BJ's wholesale is about to put forward.
You know, we were talking about, as Connell mentioned, what people bought in February. Now we're looking at some of these numbers from a year-over-year comparison. But if you look at last February, if you look at the same period last year, I mean, the comparisons are tough. So do you expect to see a big spike up in some sales just because the comparison is what it is?
I think, yes, a year ago when I guess we were facing the abyss.
Well, we were right before the market lows. I mean, we were in that doldrum.
On a year-over-year, it'd be hard not to see, I guess, improvements off of a year ago.
That's exactly what we saw at the auto.
Yeah, exactly. But again, I still think to me the sign I'm taking is the consumer is still less than enthusiastic, despite a lot of rhetoric that things are dramatically improving. I think things. You look at how many companies have outperformed their earnings estimates, and that's a great sign. I think 75% of those that did report. But the fact is the consumer is still a little lackluster. Certainly better than they were a year ago.
Not the men though. What's up with you guys? You guys going shopping or what?
Well, yeah, me and Jim, you can tell.
Nice suit, Jim.
This old thing that you're wearing is not quite, well, you can't keep up with it. You know what that is, though? We've talked about that before, is that the women, in all honesty, are selfless. They always go out and shop for everybody else, for their kids, for their husbands, and then they leave themselves out if the economy is tight. That's a trend
which is normally not a good sign, and that's what we saw in February.
Right.
Selfless. I like that.
They are.
Save the tape.
Well, my wife might be up early this morning. You never know. You've got to be prepared for these types of things. Thank you, Jim. Good stuff. Talk more on this. Jim Frischling, NewOak Capital, is with us for another instant audit. What do you make, first, of the political back and forth in Washington? Senator Bunning, kind of a strange power play, I guess.
I think the holdout had been somewhat of a gift to Democrats in terms of, I guess, them being allowed to say that the Republicans have been obstructionists.
Right.
And so I think it's been a lightning rod. I also kind of feel as now that it's passed so easily once he's removed his
So your
block.
view is they had to go forward with this?
You know, I guess you can't argue against apple pie and motherhood, and don't argue against extending unemployment benefits and health care to the less than franchised right now, because nobody wants to be on the other side of that argument,
but
it seems.
Just taking the other side, though, we are going to be in a situation, certain states are getting unemployment for nearly 2 years, and we know that people are in trouble. We know the job market is bad. But when do we say, okay, now we're going to have to stop giving these benefits because we're going to have to try to let the markets take over, and we just simply can't afford it anymore? You
know, on a day when we were talking a lot about Greece earlier and the measures that they're taking to, I guess, take their own medicine,
right.
You know, there was the idea that a $10 billion, yet another bill, and how do you pay for this? But no one wants to, again, take our own medicine. So
well, we're almost the victims of our own success in that regard, right? Because we could still go out and borrow money.
That's correct.
Fairly easily right now. Do you expect that to change? I mean, as we said earlier when we were talking about Greece, you follow the debt markets closely. Mm-hmm. Do you expect that to change any time on your horizon where it'll be difficult for America to float its debt and pay for all this?
We don't have a near-term scenario where the U.S. Can't tap the markets efficiently. So you're right. We still have the benefits of raising capital in a number of means and funding and our balance sheet can continue to expand. But again, there is the view that spending is out of control. And again, no one wants to be on the other side of the unemployment benefits argument, and which is why once the block was removed, it passed easily.
But what do we do? I mean, what do you think is the proper way to handle that? Because even with the expectations for the jobs report coming on Friday, it doesn't look like the job market's coming back to full health anytime soon. So do we keep on putting these extensions through month after month? How do we make that call?
I agree with you. I actually think the number is going to be on Friday maybe a little lackluster. I mean, it's very difficult to project that one in a time of kind of economic turning points.
Right.
But I do think it's going to be somewhat benign, if not let's say less than enthusiastic, in which case are you going to roll this benefits package again? And the answer is, I think once you're this far in, yes, the answer is yes, we're going to continue to do it, which means this type of spending is going to continue.
Until the market picks up, until the job market picks up. So now your best guess projection on that would be what? We'll get ADP numbers today, we'll get this Challenger number as we always do, and as Jenna says, the big one on Friday. Mm-hmm. Are we how close are we to a jobs turning point?
I mean, I bring that back to the lending, and my hope is that the big push to lend to small and mid-sized companies actually starts to catch on, because I think that's where the job growth comes from. And my understanding is that lending really has not picked up. So again, until you see, I guess, a clear sign that the banks are putting money to work in that capacity, and that will be I guess that will lead to, in my opinion, the pickup in jobs. Second half of the year at best.
At best. All right. Jim, thanks a lot. We'll see you on the Internet show in the next hour. But in the meantime,